China's GDP growth stood at 7.7% last year, marking a third consecutive year of economic slowdown. Experts say the better-than-expected figure indicates that China's economic activity continues to operate in a reasonable range. The country's lawmakers and political advisors are gathering in Beijing this week for the annual two sessions to discuss the country's social and economic policies. The future trends of economic development in China have once again become hot topics to be discussed. What's going to happen to China's economy this year while China's economy maintains a steady growth? Economy Report talks with experts in the field from around the globe. Let's take a look.
According to data from China's National Bureau of Statistics, the country's gross domestic product was 7.7% last year. While the figure has exceeded the estimated 7.5% target and maintains a similar growth rate compared with the previous year. Reports say the world's second-largest economy has entered a period of steady growth, and the economic development in China has returned to a rational pace. Experts are optimistic about the outlook of the Chinese economy. Jonathan D. Pollack is the director of the Brookings Institution John J. Thornton China Center. He says the slowdown of growth rate is within an acceptable range.
I am not surprised that the rate of growth has slowed. It has not slowed precipitously, but as you look at how China tries to sustain its economic advancement, it seemed to me a function of many factors that would lead to a slower but not a hugely diminished rate of growth as China tries to move from, if you will, quantitative change to qualitative change.
Pollack adds it is not easy to project with any certainty, and it depends a lot on both domestic and international circumstances. Zingzak El-Sindi is the head of Economic Policy Unit from the Center for European Policy Studies, or CEPS. She believes that the Chinese economy needs to move towards a more balanced growth.
The growth rate of this year is clearly lower than what China experienced in the past, but I think this is consistent with two factors. The global economy, especially advanced economies, are not growing very fast, and the other aspect is more related to what is happening within the Chinese economy and the fact that the economy needs to move towards a more balanced growth, which is not fundamentally based on investment.
For the past 2 years, Beijing has kept its growth target unchanged at 7.5% after lowering the goal from 8% for the first time in 2012 to allow more room for rebalancing. The Chinese government defined the upper and lower limits of the reasonable range of economic performance in 2013, with a low limit designed to ensure steady growth and job creation and an upper limit meant to avert inflation. Pollack believes China needs to turn to diminished investments for infrastructure projects and a pattern of consumption growth within the country.
I think that as you looked at a lot of the deliberations in China coming up to the articulation of goals at the third plenum, the recognition widely within serious economic planning circles is that the growth model that China had used for so long to advance its interests, export-led growth and so forth, was not sustainable over time, and that China needed of necessity to turn to diminished investments in major infrastructural projects and more a pattern of consumption-led growth within China. And that is clearly the direction in which China is headed. Remains to be seen how fully successful they'll be at it, but that certainly seems to be a very, very rational response to what is no longer a severely underdeveloped economy.
The slowdown of growth rate seems to be an unavoidable path to economic development in China. El-Sidi says it does not mean that the economy is sick or it has a problem.
I agree on the fact that China is entering on a new stage of economic development. From the stage of emerging economies, in which you have a very high growth rates, which are driven by massive investment related to urbanization and very large export, to a new stage of more mature economy. And in this new stage, of course, the growth rates are likely to be as higher as in the past. But this doesn't mean that the economy is sick or has a problem. It's just an economic development pattern which is typical of different stages of the economy.
Last year, the third plenum of the 18th Communist Party of China's Central Committee decided to comprehensively deepen reforms. And 2014 is expected to be the year of reform. There are many important reform measures to be applied, but will the reforms affect the acceleration of economic growth? Now, in the period of China's parliamentary sessions, lawmakers and political advisors are expected to discuss ways to balance reforms and growth. Experts are looking forward to seeing specific steps of deepened reforms, such as the transformation of state-owned enterprises. Hu Ka-lam is the Chief Investment Officer of Bok HK Asset Management Limited. He says the economic resources in China are being moved from the state-owned enterprises back to private sectors.
I would say that China would need some constructive disruption, meaning that on the one hand, yes, the bargaining power or the pricing power of some state-owned enterprises may be badly affected, but don't forget that it's about the allocation of economic resources. Now that the economic resources, basically in China, are being moved from the state-owned enterprises and back to the private sectors. And I do believe that the private sector will be more energetic to generate this kind of economic reforms for the benefits of the whole economy of China.
Joe Faude is an economist and Asia expert at New York University Stern School of Business. He points out several important sectors to be improved in the process of economic reform.
So I'd say two or three issues are at play. The most important thing the government needs to do long term is think about the role of the state-owned enterprises in the economy. So looking at some sort of balanced approach to pollution is something that the government itself is talking about embracing. The last thing is that China needs to defocus heavy construction. It needs to defocus things like steel and cement. China is not going to be growing at 10% a year, and those goods are just going to pile up.
He adds that an innovation economy instead of the construction economy is what China aiming for now.
This is CNC World, a new perspective.